Welcome back to Trading 360. I'm Tom White, filling in for Nicole Petalides, and now it's time for our big three. 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts, and here to take us through the trades is Scott Bauer, the CEO of Prosper Trading Academy. Welcome back to the show, Scott.
Always great to be here, Tom.
Yeah, it's a good Friday, huh? All right. So, Scott, first stock we're taking a look at is Costco. Stock's hitting fresh highs and continues to navigate the retail space better and, probably the top tier here than their competitors. What are you seeing here on Costco? We don't have earnings for over a month and a half. So what are you looking at here for a trade on Costco?
Yeah, I see a continued rally into the end of the year. I mean, if you've got one, whether you want to classify it as a retailer or even basically as a consumer staple, you've got one stock out there that is recession and or inflation proof. I believe it's Costco. I think this thing continues to rally, continues to make new highs. So what I'm doing is going out to December, which you said that's when earnings actually are. I'm going all the way out to December. And I'm buying a butterfly, but I'm buying what's called a broken wing butterfly, Tom, which you know what that is. It is where the wings are not the same. They're not the same width. So this is decidedly bullish. So I'm buying the 490 call in December. I'm selling 2 of the 510 calls, and I'm buying a 515 call. That is a decidedly bullish trade. I can do that for about $5 or so. The absolute best place that Costco could wind up for this trade at December expiration is at the short strike at 510. But even if it goes beyond that, this is still a big return on this investment. Bottom line is it's 100% risk defined. So if I'm wrong, if Costco goes down, I know what my risk is.
Yeah, and Scott, on that, the makeup of a traditional butterfly is where the wings of the butterfly that you're buying when you're long this type of strategy, they're equidistant from that middle body part strike where you're selling double, right, on that. So by skewing this a little bit, still paying a debit for it, you're defining your risk. But when you do a trade like this, is it sometimes cheaper to buy something as a directional play using this type of broken wing butterfly as opposed to maybe just buying a vertical in that to take a bullish stance because you're offsetting some of the costs, right?
Absolutely. Listen, but by doing the butterfly end of it, I absolutely completely limit my upside as well, which I would in a vertical. But you're right. This reduces my overall net cost. Basically, you can think of this kind of trade as 2 different spreads. One, being long the 490, 510 call spread, so being long a $20 wide call spread, and financing that by selling the 510, 515 call spread. So I'm long a $20 spread, I'm short a $5 spread. Best place, as we discussed, as with any butterfly or really any position, best place for this to be is at the short strike, which is the double short strike of 510 at December expiration.
Yeah, and the nice thing about buying these type of, butterflies that are skewed a little bit, you have that ability to manage or take off that trade prior to expiration. You've still got about 56 days in this trade, so it's a longer-term stance. And I think the key here, Scott, is Costco reports same-store sales every single month for the stock. That's why you don't see many gyrations around earnings because you know a lot of the data points here, but taking a bullish stance here. Now let's move over to Rick Ducat. He's going to take us through the chart on Costco. And what are you seeing? Rick, is this thing overbought on an RSI type of level, or what are you looking at here in Costco? Because it just continues to hit all-time highs.
Momentum is looking strong, but it's the bullish momentum is continuing to rise, at least from I chose to look at the MACD today, which is similar to the RSI, but it's a little bit different. But when a stock is making new all-time highs, one of the main things I like to look at are the standard deviation channels and linear regression channels. So what we do here is we use our linear regression line to make a line of best fit. Standard deviation channels, we extrapolate one standard deviation to the upside and the downside. Linear regression channels, this one is 50% from the most extreme price point. So what we do is, these can give us an idea of where we might see some kind of stopping point if this upside trend keeps going. And that's what I was trying to show here with point A on our chart. We did go above our 50% channel. pretty handily there. And the next point I would be looking at was for maybe a stall in this uptrend would be near 487 based on this particular study. So that lines up pretty well with Scott's 490 strike there. And it certainly could keep going up. There's no reason that a stock that's making strong gains and showing good momentum won't keep going up. You know what I mean? Like it's not necessarily that you want to start betting against it just because it's having a strong price movement.
Yeah, and the consumer is on fire right now and continues to spend, and you're heading into holiday shopping season on that. So that also a bonus for Costco if they can get product on their shelves. So we'll continue to watch that one. I like that the trade on a butterfly where you've only got one break even to the upside, which is 495 on that one. But Scott, I want to move to our next stock, and that's going to be Disney. Stock's been struggling this year and is down over 5%, but the different silos in which this company can, produce revenue is pretty amazing. And the transformation that they did, they got lucky releasing Disney Plus about 5 months before that pandemic started. So that definitely helped them stave off some of their losses on on not only the movie side, but also the park side. What are you seeing here in Disney?
Yeah, I like what I'm seeing here because some of the news is already out. We got news last week or a week and a half ago, whatever it was, on some of the streaming numbers, which were, less than expected, a little bit negative. They do have earnings coming out in a few weeks. But I love the area that Disney is at right here, Tom. There's some real big support in this area here. Now, I'm not necessarily expecting a huge rally back over the next couple weeks going into earnings, but I think a nice floor has been set in. So volatility is a little bit higher than normal in Disney, just because of that news that was out, a little while ago. So what I'm doing here is I'm looking for a range-bound type of trade going into earnings, but leaning a little bit towards the bullish side because of the nice support in the stock here. So what I'm doing is I'm actually trading. I'm selling a bullish, what's known as an iron condor. A lot of names, a lot of trading name strategies, sound really complicated, especially for newer traders out there. But when you break them down, they're really not. And an iron condor is one of those. An iron condor is it's just the combination of a call spread and a put spread. So what I'm doing is I'm selling the November 5th expiration, the 170, 165 put spread, $5 wide. I'm also selling the November 5th, 175, 180 call spread. I collect $2.50 to do that. So going out to November 5th, 2 weeks from now, my break even on this trade is anywhere between 167.50 to the downside, 177.50 to the upside. I really like this because it looks to me like Disney is really in for a consolidation here ahead of earnings.
Yeah, and you skewed that a little bit to the upside, and I like the fact that you're avoiding the earnings event on this one because that'll cause some additional volatility, and this is a range-bound type strategy where you don't want it to go outside of those break-even points on the upside or downside. But Rick, what are you seeing on the technicals here for Disney? Because it's been struggling a little bit.
Yeah, it has, but at the same time, I think I agree with Scott here because we are seeing a pretty clearly defined range. In fact, I chose the exact same price points to highlight according to my studies that I was looking at, 170 and 165 to the downside. 170 is represented by point A there, so that's our -1 linear regression line, just also in confluence with our old support right there. Just below that, we have our -150% channel at 165, so I think those strikes make a lot of sense personally based on this particular indicator I'm looking at. To the upside, we have a very similar situation. We have the linear regression line in confluence with the previous high point of this range, right around 187. Momentum isn't showing us too much according to the MACD. It's trending a little bit downward. The bearish momentum is slightly has the upper hand here, but not seeing too much one way or the other. Looking more range bound right now.
Yep, and that's definitely Scott's trade there, a little range-bound action on selling that iron condor, which, as Scott mentioned, it sounds like it might be a difficult type strategy, but it's basically just two out-of-the-money verticals, one on the put side and one on the call side, creating that range-bound profitability on that type of trade. But Scott, final stock that we're going to look at today is Visa. Now, you know, this payment and fintech space has been kind of overwhelmed on the headlines from Square and PayPal and others. But Visa, you know, had a good 2019, had a good 2020. It's kind of flattened out here a little bit. The company reports earnings next week, and shares seem to be consolidating around $230. What are you seeing here for Visa?
You're exactly right, Tom. And I look at this one as the old and stodgy of the, you know, payment processors out there, especially with, you know, all the headlines with Square and PayPal. But I think it's also one of the best ones. And with the holiday season coming up, I really think there's a lot of upside to Visa here. Now, listen, the forward PE is higher than many of its peers. So you could look at that and say, well, why are you bullish? I really think that everything they have done, and with, as we just discussed with Costco, the consumer really being on fire here, I really think Visa has a lot of upside. And I really see it breaking out to new highs. There is big support in this stock just below where it's trading, around the 225 to 226 area. So with earnings coming up, you know, that obviously sends a little bit of a wild card into this. But what I'm doing is I'm selling next week, the October 29th expiration, 230, 225 put spread. I can do that for about $1.75. My break even on that is 228 and a quarter. If Visa gets down to that 228 and a quarter area, I'm a buyer anyway. So I look at this as an opportunity to sell some expensive premium, collect that premium. If the stock stays where it is or goes up, great. I get to keep that premium. If not, I can buy that stock at 228 and a quarter. Or if it really falls out of bed, if it really, you know, tanks here, that's why I have a put spread on. So I'm completely risk defined.
Yeah, not selling that naked put, which give you more risk to the downside, locking that up ahead of earnings, because we all know that these stocks can move pretty rapidly. But aggressive short put vertical for a neutral to slightly bullish type stance on this. Rick, what are you looking at here on Visas? Because Scott mentioned support at that 200-day moving average around 225, 226. What are you seeing on the charts?
I didn't look specifically at that moving average, but once again, we're pretty much in line with these relevant price points that we've got our eye on. Once again, I'm just using our linear regression channels and our standard deviation channels here. I came up with 226 based on the -1 standard deviation channel and 229 based on the -150% channel. And I just kind of use round numbers here for the sake of viewability, but I would say we're once again quite close with our pertinent points we're looking at. I'd be eyeing that area near point A. You know, that the range between these two channels looks like it'd be a pretty decent buy zone based on past history. To the upside, around point B, we could see a stall in any upside breakout right around that linear regression line near 240. And you know, momentum, we had a little bit of a bullish run up. It's fading a little bit. Watch for that to keep breaking out to help confirm that upside move.
All right, kind of matching up with Scott's trade idea here on that bullish short put vertical there. All right, hey guys, thanks so much. Have a great weekend. That's Scott Bauer. He is a CEO of Prosper Trading Academy, and Rick Ducat, our chart master.